Hello traders. In your endeavors to succeed in Forex trading, you will have a decision to make on the approach you'll apply when trading. You will realize that majority of traders are either technical traders or fundamental traders. However, there is no single successful trader that engages in Forex trading without a clear understanding on the approach they employ to trade the Forex markets. The battle between technical Forex traders and fundamental Forex traders represents a long-standing debate in the foreign exchange market. Each group of traders rely on different approaches and methodologies to make their trading decisions, and so will you. The approach you apply and the approach another person apply are totally different. However, in most cases, you'll find yourself in either the two categories. Let us take a look at some of the central aspects that emerge regarding the trading approaches applied by either group. Some of the approaches we'll be looking at include methodology and analysis applied, time holism, risk management, market efficiency, psychology and sentiment, and finally we look at events versus the patterns in the different approaches applied by the two groups. Let's look at methodology and analysis. We will realize that technical traders primarily rely on historical price charts, technical indicators, and patterns to make their trading decisions. They usually believe that past price and volume data can provide insights into future price movements. Technical traders focus on trends, support, and resistance levels, and also use tools like average, that is moving average, RSI, MACD to make their trading decisions. They use tools like relative strength index, that is RSI, moving averages, and MACD to make their trading decisions. On the other hand, you realize that fundamental traders base their trading decisions on economic, political, and financial news and events. They analyze factors like interest rates, inflation, GDP growth, central bank policies, and geopolitical events to determine the intrinsic value of a currency. Usually, this approach applied by fundamental traders is more macroeconomic and requires a deep understanding on the global economic landscape. The next aspect we look at is time horizon. We see that technical traders, or rather on technical traders, technical analysis is often associated with short time frames, such as intraday and swing trading. Technical traders may make frequent short-term trades based on technical signals. On the side of fundamental traders, you realize that fundamental analysis which they utilize is often associated with longer time frames, such as a position trading or long-term investing. Fundamental traders typically hold positions for more extended periods and are more concerned with the overall health of an economy. I would rather add that fundamental traders utilize news feeds, or rather they trade depending with the news that are coming rather than the technical aspects. Let's look at another approach that is used on risk management. You will realize that technical traders tend to use specific risk management tools and techniques such as setting stop loss orders and take profit levels based on technical analysis. Their approach is more systematic and rules-based. Conversely, the fundamental traders may use risk management strategies based on their analysis of economic events. For example, they might adjust their position sizes in response to anticipated central bank policy changes or economic data releases. Another aspect is market efficiency. Typically, technical traders believe that all available information is already reflected in the price and therefore they focus on studying price patterns and trends. They assume that markets are relatively efficient. Is it so? The fundamental traders, on the other hand, argue that markets are not always efficient and that they can be information, or rather, there can be information lags or misinterpretations. Fundamental traders seek to profit from these inefficiencies by trading based on their economic analysis. Another aspect is the psychology and the sentiment. You see that technical analysis is often seen as more objective since it's based on chart patterns and indicators. Remember, it's the technical traders that use the technical analysis. And we have seen that technical analysis is often seen as more objective since it's based on chart patterns and indicators. As such, it can help traders to avoid emotional decision making. Conversely, fundamental trading, which is utilized by fundamental traders, can be influenced by sentiment and subjective interpretations of news events. As a result, traders may react emotionally to unexpected economic data or geopolitical developments. Finally, we look at events versus patterns. The events versus patterns as utilized by either category of the traders. We will see that technical traders often focus on repetitive price patterns and trends, which they believe can be used to predict future price movements. Conversely, fundamental traders are more concerned with specific events and news releases that can significantly impact currency values, such as central bank interest rate decisions or economic data releases. So, having looked at these aspects, someone will be left wondering, is there one which is right? Typically, it turns out that as you engage with markets, you will probably find out which one suits you more best. In reality, many Forex traders incorporate elements of both technical and fundamental analysis in their trading strategies. The division between the two camps is not always clear-cut. This is something that you will realize that often at times that, like when the market is ranging, a trader typically utilizes technical aspect or technical approach to make their entry and exit. However, when the market is not raging or it's trending in a certain direction, any trader might want to find out the reasons that are behind or the cause for the market to move in such a trend. Thereby, they will be employing fundamental perspectives to make their trading decisions. Successful traders often use combination of both approaches to gain a more comprehensive view of the market. Basically, we can say that the choice between technical and fundamental analysis depends on individual trading preferences, risk tolerance, and specific market conditions at any given time. The bottom line is every trader needs sufficient knowledge on markets, or rather market movement, to make their trading decisions, whether they are basing their approach on technical perspectives or fundamental perspectives. Thank you for watching the video. Let us interact later on in our next video.